Okay. Sir, before you have joined, so I was just telling our viewers that today what we are going to discuss is about how the market is going on. I mean, the market every day is going, setting up a new benchmark, every day new highs, market is going
Right.
touch. So the investors are confused. I mean, whether they should enter, whether they should not enter, they wait, how the market is going to react, they are not aware about it. So how you are seeing the market, and what's your view on the market? Uh, so the next thing is, if the investor actually want to get into the market, how they actually hedge their funds or the capital they have invested, how they ensure that it is protected, or somehow if market is on a very high, if it takes any correction, how their capital will be protected out there. Next thing, what we'd like you to give us a few feedback of yours is that the rally of mid cap and small caps are very high. They are going like anything. But there is a new circular into the market. There are some new circulars which have been put in by SEBI. How you are seeing after those circulars, after those notifications, that market is going to react. Another thing we would also like you to help us is, like, in the market there are new IPOs which are coming now. They are actually redefining the calculation of the market, because like the Zomato IPO which came up, although the company is into the losses, but the IPO has again given us a new heights. The IPO has gone up by 18%. So how this thing is even possible, or how we are looking into it? So these are the few things which we want you to guide us upon, so that actually it will help us to bring us a new portfolio or tweak our portfolios. And in the end, how we are actually decoding the market. So please help us, sir. Over to you.
Thank you, Rohit. Thanks for this invite. And I think a lot of questions you have put in, but very common questions. All of these questions are in every investor's mind. That's true. So I would like to start from a question number one, that this kind of frenzy which I've never seen in the market, from the lows of March 2020 now to almost double of that level. So actually, a lot of investors still sitting on the sideline, not able to decide whether to invest right now or to still wait for the correction. Correction is not coming. Correction is nowhere in sight. See, what happens in markets, it is actually, as you must have heard, everyone says that timing of the market is a bit difficult, where the top and catching the top and the bottom both is very, very difficult, and one should not try in that. One should not try that, because there are a lot of complex variables working out there, both global and local level kind of thing. So one should definitely not try to be cash that, whether I will try to buy only when the market is another, and or I'll try to sell in the peak, because no one can do that. I think only God will be in a position to answer your question that way. But yeah, what we can do is, while we are taking entry into the market, we can have certain principles in hand. While we can have certain general principles in mind, that, for example, if the market is already moved up by 100%, say in the last 1 year, so it is very logical that one cannot rule out some kind of correction in the market, because that's the way the markets are. If markets go up, they come down also. Maybe not today, maybe not tomorrow, then day after tomorrow. For example, if not this quarter, then maybe next quarter, you will have some kind of correction. Now, if you look at the multiples of the Nifty, all-time high, if you even have on the looking basis, the multiples are almost 28, 29, which is way, way high of the average when we talk about investing at the levels of 15. So 15 to 20, 30, almost double of the market is double expensive, as it has been in the past. And if we talk from the levels where the levels of 10 to 12, which are generally considered to be the best time to put in the money, which I don't think, that is anywhere near it. It's almost double of that. But again, still, the best part about this market right now is that we still have opportunity. One has to be specific, the choice has to be specific, the sectors have to be specific, new sectors are coming in, the old sectors are giving way to new sectors, So one has to be very, very, judicious in picking up the right sector. And before taking a general call, one has to be clear that, what I am expecting, and the returns expectations and the kind of fund allocation and the time horizon. These are a couple of things one will be very, very clear. What I'm looking from the market. People tend to take the markets too easy. They think that the market on a daily basis moving high, So my portfolio or whatever I invested will go. It is not like this. Even if you see in last 1 week, market has moved up by 1200 points. But the stocks, mid-cap general stocks which had already moved up, none of them has moved. The portfolios are out there. A couple of handful of stocks like Bharti Airtel or your HDFC Bank, Bharti Airtel, and one or two more stocks in the large cap. They were the ones who have taken the Nifty to L&T from the interest space. These are a couple of companies which have taken the markets to new high in last 1,000 point rally. So, and most of these stocks were under-owned. And what we mean by under-owned is that people had already exited because Bharti was not moving. Same was the case with the other stocks. L&T was not moving. The entire market had moved almost double. The stocks had almost gone double from the March lows. But these two stocks had not gone up. So now they're catching up the rally and taking the markets to a high. If you don't own these stocks, as nobody was owning because these were not moving, so they were not in anyone's portfolio. So they miss it. So market is moving up, industry is moving up, but the portfolio is out there. And then replying to your question of what should one do with the small cap, mid cap space. See, one thing I would like to tell the viewers that whenever whenever the selection is out for the small cap, especially the small cap, it's more difficult. It is very, very difficult to pick up because that is where you find multi-baggers kind of thing. See, if you ask someone's advice that regarding HDFC Bank or say Maruti or any other known company, Mahindra and Mahindra, people can get, yeah, they're good companies. You also know it. I also know that HDFC Bank is a good company. ICICI Bank is a good company, or Maruti is a leader. HDFC Life is a leader in insurance companies. So there's not much value where you can add. The only thing which you can do is that trying to get trying to enter these stocks at a lower price whenever they fall. For example, Kotak Mahindra Bank is a great story. When the results came in, NPA that spiked up. So the stock came down, tumbling from 1744 to 1644. 100 rupees correction in a day, in 2 days time. And down from that level, 1644 level, again to 1900 levels in a span of 3-4 days. So in the large cap area, what happens in these kind of stocks, whether it's Kotak Mahindra or HDFC Bank, you have to be buyer, as Warren Buffett also said. They're great companies. These are actually great companies. Infosys, TCS, they're great companies. So whenever you get an opportunity to buy them at a lower price, relative lower price, you can enter and buy them. You don't need anyone's advice. You don't need an expert in that because they are good companies. You just have to follow the price. You just have to follow the price for last 1 year or 6 months or 1 month time. If you find that any of these stocks, the blue chip counter like Asian Paint or not, if they're trading low, then just buy them. Because that is where the strategy is. You don't need to analyze too much in these stocks because they are the leaders. And definitely, if you're looking for returns of 15-20% kind of thing in a year's time, and reasonable expectations, then they're the stocks for you. You can know. The only thing in the large cap space, what I'll advise is never try to enter it at a higher price. For example, HDFC Bank. HDFC Bank, moved from almost 1,000 levels to 1,600 levels, recently. So if you're trying to enter HDFC Bank at 600 levels, then that is not the right approach to it. But once it corrects, whether you can use any kind of you can say judgmental value like your Fibonacci theories, or you can use any kind of trend line setting, basic technicals if you use. So whenever these kind of stocks they correct, for example, HDFC Bank corrected to almost 1,300 levels. So that was the level you could have picked in, when the stock was finding some base, some consolidations. All of these stocks behave in a similar manner. They will rise and then they'll consolidate. They'll fall and then consolidate. Before making a next rise, they will. So the consolidation is a phase where you can enter the large cap stocks. But how do you find the consolidation, whether the stock is consolidating or not? So it is not a rocket science. The consolidation, one can very well find out once the stock has moved up a level, a newer high, it makes a newer high. And then you know that from newer high, it is stabilizing out there and then it starts correcting. So it's a typical pattern. You pick up any stock in the universe, it will go up, it will reach its peak, and then it stay out there, and then it will start correcting. And after correcting, it will enter a sideways zone kind of thing. It will try to stabilize at some level. That level will never be the high level. It will never be its highest level. It will always be 30%, 50%, or 20% down level from its peak. A stock will never consolidate at a peak. It will always consolidate after retracing a little bit, maybe 30% or 60%. We use 30%, 60% from the Fibonacci theory. Fibonacci was a French mathematician. So it is basically a mathematical concept. Whatever is happening in the universe, whatever moves up, it comes down and it tries to consolidate. So so we're trying to look for a stock in the consolidation phase. The thing is that let it correct from the peak high, and then just wait whether the stock is entering into a sideways movement for at least a 2 or 3 weeks period. For 2 or 3 weeks period, if you see that the stock has not moved beyond in a range of 1 to 5%, then you can say that it's a consolidation phase. And that is the time you can enter the particular stock. I'm talking about the blue chip counters. I'm talking about stocks like, your HDFC banks of the world or ICICI Bank or Axis Bank. They're all top counters of the Nifty stocks. So if these stocks Now, the second approach for identifying for these bigger stocks is if all of a sudden some negative news comes in with any of these stocks, maybe a stock like HDFC, RBI banned, making of RBI came out with a dictate that the HDFC bank will not be able to issue new credit cards because the technology is not of that level, and they should first rework on the technology. So the stock corrected. Now, these kind of correction, these kind of news in the large cap, they are very good time to enter into these stocks because they give a knee-jerk reaction there. Because these kind of news, they will never be able to destabilize the basic business model of these players. For example, Asian Paint or your Maruti. So maybe some kind of news comes in that some negative things comes in for a quarter or so. But what you should do, you should use this as an opportunity to buy because they will rebound because they have been in business from last donkey's year, 20, 25 years, 30 years, they've been working on same model successfully. So nothing will happen, all of a sudden, if even some new news comes in, for whatever the best interest parties are, whoever is coming out of the news comes in, it's an opportunity for you to buy. So rule number one, when you're identifying a top stock as a blue chip stock to enter, then you either enter into when the stock is trying to consolidate, and a consolidation I explained how to identify consolidation. And the second level is if some kind of news comes in and the markets reacts, all of a sudden market reacts and comes up by 10-20%. That is the best time to buy these stocks. I'm talking about large cap stock. I'm not talking about mid cap or small cap. So for large cap, now we discussed that how to identify the entry points. One is it has to be in consolidation. Other is some news comes in, then you have to be out. Now, coming to the question of a small cap, in small cap, what happens is it's a different world altogether. The business model is not robust. The management, you are not very sure about it. The business model is not proven. And it's a long way for these before they become a blue chip kind counters or before they enter into the mainframe kind of things. So you have to be very, very particular, So you have to, there, a lot of studies is required. If you're trying to identify a multi-bagger, then either you have to study that stock, that sector. You have to be very, very clear that what sector, what stock I'm getting into. You have to write from the management to the sector, to the core of the business. You have to study everything in detail. And that is a very helpful task. If you're not from the finance field, if you're from IT field or some other field where you don't understand the balance sheet and all, then it is definitely advisable that you take help of some advisor. You come to some advisor and seek his help. I'm talking about identifying stocks in the mid cap space and small cap space. Especially in small cap, never buy a stock based upon any kind of tip or any kind of just rumors kind of thing, because the fall can be really very sharp, and you will, as an investor, you might be if you're especially a new investor, that might be very brutal for you, and you will not be able to take that. Markets, they leave nowhere. These kind of stocks, they can wipe away entire capital also. Sometimes it happens if the entire capital will wipe out. So instead of wealth generator, they can become wealth destroyer. So there's no point. So while entering for a small cap, one has to be very careful. The reading has to be in depth about the company, about the sector, why you're getting it. The time horizon has to be very, very clear. And then regular updations of the quarterly results and all. Then you have to update yourself before identifying the particular stock where you're trying to get it. But never venture into it without a study. So, and the best way to study is that you take some help of some financial advisor, whoever is advising you, you take his help, and he can guide you out. And a little bit different approach needs to be taken for the mid cap. Mid cap is between small cap and large cap. In mid cap, the business model is a bit proven, and you have some kind of track records. The stocks will not show that kind of sharp movement as the small cap. The capital will not be eroded that fast as you can talk about the small cap. And the futures and options is available out in mid cap and large cap. So most of the stocks, the good mid cap stocks, you will have options out there. Options can work as a hedging strategy for you. You can always hedge your portfolio. If you have invested, say, 10 lakh rupees in portfolio, then you can, either you can sell Nifty or you can, sell option on that particular stock. For example, if you're into Page Industry or into Pyramid Enterprises, mid-cap stocks, then you can, you have the option of buying put options or writing the call options on them so that you can hedge the portfolio. So in case the market falls by, maybe the stock falls by 5%, 10%, you are, adequately covered up to 5 or 6%. So your net loss will be around 4 to 5, or 3 to 4% as against 10%. So these kind of strategies, they can work very well in the large cap and the mid cap space. But for small cap, as I discussed, it's very, very, the sharp moves are very volatile and sharp. So one has to take advice of financial advisors. One has to take that. So that is a nutshell, how to go.
Okay. Now, so just a brief upon how are we looking into our portfolios as on date. If we talk about the market and considering the gainer strategy towards the market portfolio, how are we looking into the portfolios? That what should we do for the coming month? I mean, just a little perspective about the market. I mean, nobody can judge the market, but just a little perspective about the market, how we are looking in going forward for a month's time.
Yeah, going forward, one has to be careful, because definitely it's time to be a bit cautious whenever market moves up like the way it has moved up in last maybe a month also. In last month also, we have seen a Nifty moving up by good 8 to 9%. This is very high, for Nifty movement of 1,200 points, and that too on a higher base. It is a bit time to be a bit cautious. And now the July earnings are out. Sorry, the June earnings are out. We are already in August, and after that, the September quarter earnings will come in, and that will give some base. So September might be a lull period, or it might be a consolidation period. Where a lot of expectations will build around the September quarter results. And then you have this third wave, COVID third wave, in your mind, that if what happens if third wave comes in, that is also a possibility. That also will happen in September, October only. If that comes in, then again, the calculations of whatever we have made, they might be jeopardized, or they might be off track, going forward. So my advice would be that if you are looking forward for 1 or 2 months, from September onward, a bit cautious. Keep some cash with you in the portfolio. Don't be invested more than 70%. 30% has to be in cash right now. And the stocks which one is invested in, they should be typically large cap stocks. Something like Bharti Airtel, which will not be, because it is now started moving up. So the chances of going down, or the chances of a sharp fall, are very less, because now it has moved up after a lot of consolidation. The stock has started moving up. Same goes with stock like L&T, in the infra space. But definitely, I would like to sound a caution on the mid cap banks. Some of the mid cap banks, even the large cap banks, they might have some kind of negative surprise next quarter, because of this COVID thing. Because now things are coming up. So it has been only one quarter after the second wave. This is the first quarter after the second wave. So the actual thing will come in, from the next quarter onwards. So if everything goes fine, if the large cap players, large cap banks will be in a position to, steer out of this problem far more swifter than the mid cap banks. So one should avoid banks like Federal Bank or your IDFC Bank, because these are the banks, which can, they will not be in a position to take on this kind of volatile movement. If something negative on the side of the COVID comes in, or the third wave comes in, it will differ for them. So FMCG looks good to us. Stocks like ITC, though they've not been given results in the last couple of years, the movement has been weighing down. But definitely it's a blue chip counter, and it's a consolidation space. How long this consolidation will last, that is anyone's guess. But we believe that, if someone is a patient, for maybe 1 or 2 quarters, I think, we are up for some kind of positive surprise in ITC. So that is one stock we can suggest that, one can look at ITC, one can look at your Larsen Tubro, the capital, because the government will be spending too much on the infra side. And already the management commentaries of large companies are saying that the capex cycle will start now. When the capex cycle starts, so obviously the companies like L&T will benefit, because they are into construction. They will be doing civil work for the plant and machinery, whatever when the bigger players they try to come on the capex side. Banks, large banks will also do good, because when the capex cycle starts, then the credit offtake is there, and the banks like ICICI Bank, Axis Bank, which are corporate heavy bank, they are very active in the corporate side. So you can look at that. So we are at you can say kind of inflection point. The couple of challenges are there. The main challenge is, I think, the COVID side is the main thing. The rest of the other things have been taken care of. I think things are more or less settled now. So if there's no third wave, then definitely we are up for a pleasant surprise in next couple of quarters, and we are on a good trajectory. Ups and downs will keep on coming. One should always keep in mind, bull market doesn't mean that there will not be corrections. And one has to be very, very prepared for these kind of corrections, because they're very sharp. The corrections of bull market are far more sharper than the corrections in a bear market. In bear market, the market is already on the downside. So the corrections are never that severe. But in bull market, what happens is corrections are actually severe. So they tend to confuse the investor. Are we entering a bear market? But I can assure one thing, based on my understanding, I don't think that going forward, at least for 2-3 years, I do not think that we are headed for a bear market kind of scenario. So things are looking up only. You will have corrections. Definitely you will have corrections, very sharp corrections in the way. Don't get swayed away by that. Don't get worried that, it's not a start of bear cycle. For sure, it's not a way. Because things are really moving at the ground level. Things have started picking up. Economy moving out. Exports are showing traffic results. So I think overall, we are poised for growth the next couple of years. And I think it's time to look for opportunities in the market, and one can remain invested in the market.
So there's one question from our user, Mr. Ritik Sharma. He just wanted to know how to go about self-analyzing small cap companies. So, I mean, you have already briefed us about it, but just for the sake, let's say, what are the basic points which need to be looked in? Let's say if we jot down one, two, three. So, what kind of things or the numbers which we should
If
surely
you
look?
are, yeah, if you're trying to analyze on your self-analysis, and if you understand finance, if you understand the balance sheet, then okay, you can start. First of all, you start with the management. It is not a finance, it's a non-finance thing. You have to study about the management. You have to see who is in the driving force and what is the background of management. Whether they're the first generation, second generation, third generation. A lot of companies are showing a turnaround potential because the next generation is entering. Their son or daughter are getting educated in the US, Harvard, or bottom of the world, Columbia. They are coming out and joining the business. And they're bringing fresh approach to the market. So, for example, same thing happened in Imami. I can give you a couple of examples. Imami being one of them. The daughter has come from US after Columbia, doing MBA, and joined the business. Trying to same with Jyoti Laboratory. In Jyoti, same thing is happening. Jyoti Laboratory, same thing happening. So a lot of other companies are there. Which were and in the small cap when you're analyzing, so you look for it that who is in charge. Go through all of the companies which are listed in this space. They come out with the quarterly results, right? We all know, and they come out with a management commentary also. Listen to that management commentary. Listen to the analyst call. There is an analyst call of almost 1.5 hours, which is available on a lot of websites. One website which I use is Trendline. You can use the website Trendline and go to Trendline, and then particular in the financial section, you can go and find the management commentary in that. So every quarter the management will come out with the commentary. So go through the commentary, listen to it again and again, and try to see whether your idea, your expectation of a multi-bagger is aligning with the management. Are you convinced what he is saying? That sector, the way that they're looking at it, and that is what you should try to analyze. Once you analyze that, then there are obviously certain parameters out there. One of the parameters I can tell you is return on equity. Return on equity is you should identify that whether that company is giving return on equity of more than 13 to 15% on a continuous basis in the last 3 years. So if the company is not giving return on equity, that ratio is also available on the research website. If you don't understand, then you can study at that. The result, return on equity in the last 3 to 5 years, it has to be more than 13 to 15%. Companies like Asian Paint and all, they are more than 30% plus. So that's why they're called blue chip. Any company which is about 25% return on equity year on year basis from last 4-5 years, it is a blue chip. Okay. So if you are there are a lot of small companies where small cap companies where the return on equity is more than 15% and the management is strong and they are talking and the growth is huge. For example, the chemical space, when after China issue came and a lot of polluting factories were closed down in China and China was moving out of that. So that gave a huge fillip to Indian chemical industry. So that is why you see companies Navin Fluoro and all, they moved up almost 10 times, from the lows. Because the China being out of the picture, now who will supply the dyes and drugs and all the chemicals and all? So it's India. So they got a boost. The supply got a boost. A lot of companies like Sumitomo Chemical of Japan, they were only doing trading in India, but now they started they plant in India. So these things are. So you have to analyze when you're analyzing the small cap, all these things have become very important.
Now, sir, another question which come up is like the considering this market scenario as we talk about the market is looking good, and for let's say next 2 or 3 years, you're saying the market perspective is bullish only. When we talk about selecting a particular security, what segment do you actually recommend? Should we again sit very cautiously into the blue chip, or we move into the small cap or mid cap segment and try to enjoy the rally? So how should we go about it?
The
What is
portfolio, as an investor, the portfolio can never be small cap, mid cap. It has to mix of three. You
okay?
have to have all three in your portfolio, and you got to and then some cash portion. The fourth component is the cash component. So right now, 25% to 30% has to be in cash. At this level, the levels we are in, you have to be in a cash of at least 30% of the investment. And at this level, your 30% of the portfolio has to be, see, out of 100 rupees, 30% gone for cash. Now you're remaining 70%, 70 rupees. So out of that 70, 30 has to be in large cap. 40% has to be 25% into your mid cap and 15% is small cap. Because small caps have moved by almost 7 to 8 times also. A lot of good companies have moved up by that much. 17 rupees stock becoming 170, 100 rupees. It's very common kind of thing. But this kind of growth will not, be sustainable. It's not sustainable. So a time will come when they consolidate, they stabilize. They're good companies. I'm not saying that the price has moved up like that only. There are operator stocks also. One should stay away from them. I'm talking about good small cap companies which have really moved up. They're going well because of a lot of demand in sector, or maybe because of some kind of turnaround story in that, maybe some kind of management change in that. That this thing happened. Stocks have moved up. But you have to be very, very cautious now, particularly because the stocks have moved up. So a stock which has already moved up 10 times, it will not go again 10 times, it will not go. The chances probability is less. It's a simple math. So the chances become less because on a higher base, it becomes difficult. So what you should do is first you have to identify the sectors. I can say I can speak about a couple of sectors which I feel should do well. One is the industrial, because when the capex cycle will start, industrial will do well. So companies like Thermex we can look at, or other, even BHE, although the results have not been encouraging last couple of quarters, but I think going forward in next one or quarter we'll see a sea change in the companies like Dale also. So that will not be a bad idea to invest into companies like BHEL for long term, because they are also part of the industrial one. So capex means whenever all the companies are doing capex, that means it's good for the industrial sector. It's good for the company in the infrastructure space. Companies like Larsen Toubro from the large cap, or otherwise small cap. You can say small companies from the mid cap and small cap in the infrastructure. So infrastructure and industrial, these two sectors, they look quite promising going forward. Pharma will do a medium kind of thing. Pharma and IT, they will keep on doing medium kind of thing. And then there are a couple of pockets out there in the consumer space. As we discussed about large cap and ITC, and like there are other companies as well, which can be identified on the mid cap and small cap radar. You can find out. One sector which comes to mind, for a long-term investor, if looking at the story, is the defense sector. Defense. See, defense. This government, the present government, has done a sea change in the function of the defense sector. Companies like Bharat Dynamics Limited, Hindustan Aeronautics Limited, or the BEML of the world. These companies, they can be real multi-bagger kind of thing, but not in 5 or 6 months, but definitely in 7 to 10 years time. Because in defense, the product cycle is very, very large. They start building a project, they start building an aeroplane or something like that. It takes years and years. So the real output, the product cycle is very long. So you have to keep that in mind, because the product cycle is very long. So you don't expect the possibility of these stocks doing very well in next 6 or 7 months. But yes, if you ask me, the stocks like Hindustan Aeronautics or Bharat Dynamics or BML, they can be multi-bagger. They can be 10 times in 10 years. That is one thing I can see, because I attended the Defense Expo in Bangalore last year. The way things are moving up in the sector is really commendable. The way the government has done the job. So this is one sector which should definitely be on your list. So again, summing up, I talked about industrial, then I talked about your infrastructure space. Now I'm talking about defense, and then in between we talked about the consumer space like ITC. So you can start with this, but the remaining sectors which have really moved up, moved up by many times. So one should avoid, and especially in the banking side, I will say that one has to give some time. Next 1 or 2 quarters might be quite tricky for the banks. If everything is fine, then definitely one can look at banks. But otherwise, one should wait for 1 or 2 quarters before ending into bank, and then see, maybe you can get a better valuations, going forward in the banks.
Okay, sir. One last question, sir, is now, what would be the kind of strategy to exactly know what would be like that this is a point where I should book a profit in my share and move ahead?
Very good question. This is a very common question which is in the mind of all the investors, that this is how I should book the profit. See, there are a couple of things, a couple of ways of identifying. Like we identify how to identify consolidation. I explained how to identify consolidation. Likewise, when to book profit is also see, while entering a stock, as an investor, while entering a stock, you have to be clear whether I am a short-term trader or I'm a very long-term kind of player. In this market, I will not advise to be a long-term player because the market is almost very high. So all these stocks will correct. So they'll give you a zigzag bound movement. All the stocks will correct. They will go up, they'll come down because the market is at high. They will go. So right now, it doesn't make a case of long-term investment. Buy today and just forget. That will not happen the case. Even a stock like L&T, as I discussed, or it is now at 16. Last 2 days gone up by 10, almost 5-6%. Maybe it goes up by another 5%. Again, it will consolidate. It will come down, and then again it starts upward journey. So the best point, if you are doing trading come investing, if you're mixing these two strategies, which one should look at the current scenario is not a scenario of the investment side, because that the kind of long-term investment is made only when the market, when the Nifty, the PE multiples are under 15, not at 30. Right now, the PE multiple of Nifty 30. So there's no point of going long-term investor. Long-term values have to be identified only when the market is at the bottom. So nobody, when I say bottom, I mean bottom in the sense that, which is no-brainer kind of thing. Not exact bottom, but suppose today the market corrects by almost 10-20%, next, so that will be kind of the point where you can look at long-term kind of investment. Right. So booking of the profit, one is that, if you're a short-term player, if short looking horizon is 2 to 3 months kind of thing, then book a profit before the company comes out with the quarterly results. Every quarter, the company is coming out with the quarterly results. So if you're trying to book a profit because before the AGM or before in a year's time, all companies, they come out with the annual general meeting. That is one time before the announcement comes in. Or every quarter, every quarter you have to identify whether you want to be in the stock or not. You enter a stock today, then wait for at least 3 months time or 2 or 3 months time, wherein you can see wait for the next quarterly results. Once the results are out, that is the time to decide whether I have to book profit or I have to stay.
Okay, sir. Thank you, sir. Thank you very much. I mean, these are all the questions which we had in today's session.
Sure.
The session was really grateful and helpful. We'll be looking forward for more such sessions and having a platform to interact with you. Thank you,
Sure.
sir.
All right. Thank you.